Sudip Bandyopadhyay is now with us. Sudip, BHEL, were you surprised by the results? And that's why, and even the markets were surprised. That's why a 16% sort of a reaction.
Absolutely. I think, nobody expected BHEL to come up with these kind of numbers. I think the consensus estimate was a small amount of loss, between 15 to 20 crores of loss. As opposed to that, they have come up with a decent set of numbers. Of course, that calls for a little bit of a kind of correction from where the share was. And I think that's exactly what is happening. Having said that, Pankaj, I continue to maintain my view on BHEL. This euphoria aside, I think it's an avoid. There are still lots of problems the company has, and they need to resolve those before we can take a view, a positive view on BHEL.
Right. You mentioned about the small loss which the street was estimating, but I was looking at the sales numbers. So 4,400 is what the street was expecting, a 1 to 2% growth, but they've come up with 5,500, which is a very good growth of greater than 25%. That you think has led the entire numbers?
I think so, Pankaj. I mean, we still get to the management commentary and explanation. But yes, you're absolutely right. I think that has done the trick. But I think, I don't want to sound negative on a day like this when they have come up with something good after a long, long time. But I think the concerns are on different fronts. Concerns are on the recovery of the debt. The Uday scheme, I think the BHEL debt is the last in the list of stuff to be cleared under Uday also. So there are significant PSU debt which is sitting on BHEL's books. And when they will get the money, I think it's completely uncertain. Of course, there is the Chinese competition. By and large, it's a single product company catering to the power companies. And performance hasn't been anything great over the years. So, and even if you look today in terms of return on capital and things like that, I don't think it does measure up for any great rating or anything like that. So I think we will continue to kind of be cautious and not recommend a buy yet on this stock.
Right. You may not recommend a buy, but the internals are quite important, whether it's the order inflow, which is muted, or, the overall order book that provides limited visibility for continuous growth. That's what you're trying to say?
Absolutely. And they have the, whatever sales they have done or whatever sales they are doing, the recovery of cash flow. I mean, the cash flow against that, again, is a bit of an issue. So, yes, the future is not very clear as things stand today as far as BHEL is concerned.
Right. A word on L&T or some of the other players, you expect execution there also to be superior, or, you just take it company by company?
I think, this comparison keeps cropping up between L&T and BHEL. I think a couple of things we must remember here. One is L&T is definitely not a one product company. They have multiple verticals, multiple businesses. There is only one area where they compete or they are comparable with BHEL. And yes, you're absolutely right. The execution has been much better at L&T. Obviously, being a private sector company, they follow much tighter cost controls, and they follow much tighter recovery schedule and things like that. So I think even in the like-to-like comparison of that particular part of L&T, I would rank L&T ahead of BHEL. And of course, on top of it, L&T has got multiple other businesses. There is a significant amount of construction, infrastructure, and engineering, and whole lot of other things. So L&T is way ahead in my pecking order as far as this space is concerned. And yes, if somebody has to take a bet on the infrastructure growth story of India, maybe L&T is a good bet. If somebody has to take a bet on defense made in India, probably L&T again is a good bet.
Right. How would you look at PSU banks? Canada Bank is up 8%, PNB is up 6%. And, time and again, we've had this discussion about whether their earnings would recover or not, whether asset quality is bottomed out or not. Just looking at the momentum, you think that there is further upside into PSU banking names?
Well, I think if you look at a long-term, take a long-term view, of course there is upside from here on. We are probably seeing the initial kind of flashes of recovery. But I think there probably maybe another dip before eventually it starts recovering. our feeling is that next couple of quarters also are going to be extremely challenging for the PSU banking stocks. The capitalization issue is still not resolved. How much capital they eventually will get and when they will get, that's not clear. NPA issue is still not settled. There are significant asset quality issues. Also remember the restructured assets, some of them may come back and hit back them as NPA. So overall, I think the situation as far as PSU banks are concerned is very, very fluid still. So if I have to really take a bet on a PSU bank, probably I go and take a bet on SBI. It's definitely by far the best PSU bank. And with the consolidation in the horizon, it's going to become much more efficient, much more, what should I call it, world class in terms of size, in terms of the heft. So if I have to take a bet, I will take a bet on SBI. We have a target of 300 on SBI.
How would, yields coming down help these banks? Is that the only play, or there is much more than just yields coming down?
No, there is much more than the yields coming down. I think the asset quality is the biggest issue. The interest rates will come down in the economy. Sometime again, interest rates may go up. I think that's to an extent will affect all the banks and all the financial services companies. So that's not what is bugging the PSU banks. The PSU bank basic problem is the asset quality. That needs to be addressed. And related question is the recapitalization, so that they are back in business. They can start lending once again. They can take part in the growth of the economy, which is today not at all clear. It has to, in our mind, a couple of more quarters has to pass before we get clarity on that, before we have a visibility as to the future of the PSU banks.
Is something like a ICICI or a Axis better placed than PSU ones in terms of a recovery on the corporate cycle if somebody wants to play?
Absolutely, there's no doubt about it, and that's the reason why you see both ICICI and Axis moving up significantly. I think last couple of weeks has been excellent for these large private sector banks, which were also plagued with NPA issues. I'm not saying the issues are over as far as these banks are concerned. There may be still some issues. There I'm sure will be some of the restructured assets will come back and hit them again. But overall, if the economy recovers, if infrastructure picks up, if power sector gets back on track, I think the private sector large banks who have been big lenders to these organizations will recover faster than the comparable PSUs.
How would you look at something like a Yes Bank, IndusInd Bank versus some of these names? As the recovery happens, these banks would also be priced at that level in terms of valuations?
Look, I think, IndusInd has been doing very well. I think quarter on quarter, they have been beating the market estimates. There is hardly any asset quality issues. And the valuation also, I think, is kind of full as far as both Yes and IndusInd is concerned. So the scope for significant upside from here on is limited, according to me, as far as Yes, IndusInd, even Kotak is concerned. Whereas if you look at the PSU banks or a bank like ICICI and Axis, I think because of the asset quality issues and because of the performance issues, they had been significantly beaten down. And I think once the economic upswing starts, once the asset quality thing improves, the scope for valuation-wise or boost in valuation is significantly higher in case of PSU banks and a bank like banks like ICICI and Axis.
As far as Jain Irrigation is concerned, any view? It's up 10% today.
Well, there have been some research reports which are recommending Jain Irrigation. I think that's the one single reason why it's up significantly. There have been some targets in the range of 130 which has been put against the stock, so it's moved up. Having said that, I think it's a good long-term buy. Unrelated diversification and multiple other issues which caused a huge problem and the share got beaten down, I think is a thing of the past. Company is sticking to the core competencies. They are focusing on the core business, and I think they have learned their lessons. So I think for an investor with 1 year plus time horizon, it's a good buy.
Right. Even after the recent run-up, one should go ahead and buy?
Well, as I was mentioning, Pankaj, if it's a 1 year plus time horizon, you can definitely buy. Look, the government's stated objective is micro irrigation. They have been focusing quite a lot on micro irrigation. Going forward, I think the rural economy will get much bigger boost, and micro irrigation probably will be the biggest beneficiary. Undoubtedly, JN irrigation is the most prominent player in that particular segment, so they eventually will definitely benefit. I think if you have a couple of years time horizon, this is definitely a good buy.
Right. As far as Jain irrigation is concerned, do you believe that the overall way in which return ratios were looked at has changed with the debt coming down? That is something which the market was waiting for. That's what markets are looking at: restructuring or debt reduction.
Absolutely correct. That's the point I was alluding to. In fact, the unrelated diversifications and kind of the money was blocked in multiple unproductive or non-core activities. I think they have and they are trying to get rid of most of these. And the balance sheet quality is improving. Focus is coming back to core business, and I think that's what is taking the company forward.
How would you rate Bajaj Finance? Of course, execution-wise, there is no doubt they have done one of the best works in the last 5 years. Their books, their overall growth numbers, the sort of quality that they have displayed in their earnings is quite phenomenal. But at 11,500, more than 5 times price to book value, would you be looking to buy Bajaj Finance as a safe bet or just avoid it till there is a correction?
Pankaj, I think I will. It's an excellent company, but at this valuation, I probably will not be a buyer. I won't recommend a buy either. You are absolutely right. The valuation looks full, but if there is a correction and it comes around 10,000, I think I will look for buying it.
So basically, a 15% correction is what you would look at.
Yeah, anywhere between 10 to 15% correction, if there is at all one. I will definitely like to buy Bajaj. You characterized it absolutely correctly. It's a great story. They have done fantastic work. I think all the boxes do get ticked, but the valuation is rich. So I don't think buying at current level will be worthwhile because you look at appreciation. So, if somebody is looking at a steady return and calculates that, probably he can get in. But for appreciation, I think the levels are quite elevated.
As far as, something like a Bajaj Finance is concerned, they have always come up with new innovation, new products, the way they are operating, the way they want to give loan, take loan. That's essentially their new innovation, which has driven their numbers so far. If that continues, if there is an investor who's holding on to Bajaj Finance, just hold on. It would probably give you better returns.
I think it's a very tricky thing, Pankaj, and honestly, I don't have the answer. I think the kind of valuation we are seeing, if I was the investor, probably I would have, taken the opportunity and exited maybe at least 50% of my holding and invested in some other interesting stories in the similar space. I would say identical, but similar. Maybe I would have taken 50% of my money off Bajaj Finance and gone ahead and bought some of the housing finance stories, particularly LIC housing finance at current levels. Or maybe I've gone and bought maybe a little bit of Capital First there, or a Cholamandalam finance. Not because of the quality of the stock, not because of anything else, but the sheer fact that the possibility of appreciation from here on is more in a company like LIC Housing Finance, Capital First, or a Cholamandalam.
Right. Can you just explain that into further detail? Cholamandalam, we had a big block deal. LIC Housing, what's the call? There are 2 different companies that we're talking about, maybe even Capital First. These are 3 different NBFCs that we're talking about. Can you start with LIC Housing and then go to Capital First and Cholamandalam? What's the call over there?
Absolutely, Pankaj. I think, as I repeat, Bajaj Finance is a great story. But at current valuation, I will probably recommend, if somebody is holding, exiting 50% of their holding and putting money in the stocks I mentioned. LIC Housing Finance is a great story. Remember the predominant part of their portfolio, 85% plus, is in retail loans. It's a very steady, stable business. Recent changes made by RBI in corporate bond arena is going to lower the cost of LIC Housing Finance further, which will improve the margins going forward. It's a great story. The growth is absolutely on track. So at current level, I definitely recommend buy in LIC Finance. Capital First again is a very, very interesting story. The way they have built the business, the way they have gone ahead. It started as a wholesale kind of a business. From there, they moved on gradually to retail, and I think they have done a fantastic job as far as SME loans are concerned. I think there is a significant scope still there, and investors can go in and buy. Cholamandalam again is a slightly different story, but again the scope for appreciation from current level is there. The two-wheeler financing and the other allied activities which they have been involved with predominantly, we believe the scope is significant. Look, the monsoon has been good. Pension, the pay commission money is going back to the people's hands. Festive season is kicking in. All this will significantly increase demand for consumer durables, including two-wheelers and four-wheelers, smaller cars. I think that's a segment which is expected to do well in the next 6 to 12 months. And we are pretty bullish on companies who are operating in this segment.
As far as Tata Motors is concerned, any view? It's doubled from the Feb lows.
I think, I have been bullish on Tata Motors for some time, and I think I did mention when we spoke last, it was probably available at one of the most attractive valuations for such a large automobile company with a global presence. Remember, we should see Tata Motor with the domestic operation. JLR is the key today, and that piece is functioning perfectly well. The Jaguar numbers have been amazing. Land Rover also is doing well. North American business is steady, stable. On top of all that, the Chinese manufacturing, they have a manufacturing joint venture in China, and that's going full steam now. With that, the cost of sales for China is going to significantly reduce, and that will help improving the margins. Also, as far as Europe is concerned, the Slovakian factory is going on stream soon. That will reduce the cost as far as European markets are concerned, and that again is going to help the margin. So overall, I think a lot of good things are happening in Tata Motors. Also, remember, they have been gaining some business in India. They have got some order for some buses, which they are going to supply within this financial year and things like that. That's going to improve the local business. So overall, I think it's in a sweet spot. Even now, if you compare the valuation with one of the global majors, it's available at a reasonable valuation. And I think somebody with 1 year time horizon can definitely buy Tata Motors.
Right. On the domestic front, do you believe a lot can be expected from Tata Motors because the base is very low, even though it may not be percentage-wise a big number in the total share price?
I agree with you. You're absolutely right. Because the base is low, things will improve, and if you take it in a percentage, it will look very good. But yes, overall context, it doesn't matter. What only matters as far as this company is concerned is how JLR performs and how JLR keeps improving, quarter on quarter, year on year.
Right. Sudip, thank you so much for taking out time for us. Hope to see you again soon.